Hey guys, how are you? Yep, it's the Market Sniper here, coming at you with an economic conundrum. This is not a technical charting one, but I am wearing the Market Sniper hat here. Um, so here's what I want to talk to you about. There's a lot of talk about, so where's the inflation? And I'm going to talk about where's the inflation. I'm going to also get into a discussion on the Triffin dilemma, which many people don't know or understand and get a bit boggled by geeks when they talk about Triffin dilemma. I'm going to give you a fairly simple explanation. I'll give you the full story and then essentially the summarized version of it so you understand Triffin dilemma, which is all around the country with the great privilege of being the world's global currency, which is America and the dollar. In fact, it's going to have a lot of American and the dollar aspects to it, which should be good for our American audience, but also very important for all other audiences to understand. Given our recent appearance of Brent Johnson and the dollar milkshake theory. By the way, we're also going to be having the very capable and very interesting Lynn Alden as well, following up and interviewing her, which hopefully will also be good and very insightful. Thank you for the positive comments on Brent Johnson and the dollar milkshake discussions. And we'll get Lynn up and we're going to talk about some of the aspects where she differs on the dollar milkshake theory, but also on a very other interesting elements, such as negative interest rates, how far till we get there for the US, what the repercussions will be, what she sees coming, etc. So stay tuned and make sure you have that. Okay, so what are inflation? Inflation and where the hell is it? Is so many people's question. So let's deal with that. Oh, slug of the white melon juice to calm the throat. So many people are saying, yeah, but we've created this 5 trillion in 3 months, but there's still no inflation. Modern monetary theory can work. We can make as much money as we like. We can create it, as much of it as we like. There's no risk of inflation. It's the new world. Inflation is not a problem anymore. So I did a lot on the BLS, which is the government's statistics, and Shadow Stats, John Williams. Check out John Williams' Shadow Stats for that. Essentially, on the 82 measure, you're probably around double digits on inflation. So first of all, if you let the same people who are running the scam tell you what the inflation rate is, you're not getting the facts. You know, deceivers are going to deceive. And there's many ways, and we talk about lies, damn lies, and statistics. There's many ways to scotch statistics, in the same way that Biden's winning a landslide by asking teenagers on internet polls and leaving the people who really vote, the older age groups, out of your survey. You can orchestrate almost any result. And in fact, we called BS on Brexit and said Brexit would happen into the face of the bookies that are incredibly good at doing prices. They regularly get the football odds spot on, and they put a position out on Brexit. They said 1:7 chance of Brexit. So we don't suffer the internet pollsters particularly well. We come to our own conclusions. That's one of the reasons why you subscribed on this channel. But anyway, let me just have a talk about the inflation element. So you're looking at fake stats, which is why you're not seeing double-digit inflation according to the Reagan era inflation. Number one. Number two, you get in, and I did a lengthy one about the two balloons, and this might have gone out on Reset Sniper, I'm not entirely sure. The people that are getting the money that's being created is the intermediaries have been, till now, the banks, because the central banks can just create ease for banks to lend, but new money and it doesn't come into existence unless a bank is creating a loan and giving a loan out to somebody that they think has a reasonable chance of paying it out. And as I explained in the Reset Sniper, and if you're not on the Reset Sniper channel, I want you to handle this because we're going to go very quickly, just recap where's the inflation, and we get into what I really want to talk about. And that's how the US market is as high as it is. and how it's engineered and how it's being required, and why jobs are so low in America when you take the participation rate into it. So if you take that bubble and you twist it, that balloon, sorry, and you twist it, you can pump air into one half or one smidgen, and the larger part of the balloon doesn't get any of the air, and you create a crease or a twist. It doesn't happen. Now, at the moment, megacorps that almost have a too big to fail government implicit guarantee are getting all the lending. Why? Because government's standing behind them. They don't why lend to an SME when you're busy crushing SMEs. It's part of your agenda through the COVID scam to crush SMEs. You're closing them down, you're making them distance tables apart, you're making staff wear masks, which makes it a loathsome job. You're reducing numbers, you're reducing the amount of restaurant seats. This is just in the restaurant industry, of course, the hotels, beverages, leisure, all of these guys are facing all of these draconian new rules. And I'll be doing a reset sniper on why this is control, not disease. But let's park that for a while. So why is a bank going to lend where it's almost quite clear that the safest place to lend is your megacorps? Now, what's happening with those megacorps is their clients, often retail clients, you and I, are not, until the money started getting handed out directly to the peasants, are not actually doing so well. So what do is they retire their stock. They buy their stock back. This is how we get situations which Simon Black highlighted of Coca-Cola, which is doing less revenue, has much higher debt, and yet the stock price is double what it used to be 4 years before, when it was more profitable, had less debt, and had a higher turnover. So that's actually a failing curve on a sugar and water drink that is actually seeing the stock still higher. And there's many corporations that are flatlining that are even significantly more. And in fact, just on that point, when we touch on stock markets, we got out of a cheeky tactical short in Tesla at about $184. That was not much over a year ago. That Tesla has gone from essentially the $200 level that we saw to 2,000, 10x in just over a year. That's unbelievable. You're getting 1 million per car contribution to market cap that they've ever sold. Think about that. There is just no basis for comparison. In fact, I think someone calculated it that Apple, which is far from cheap, had the same earnings P ratio, though their share would be over $15,500. So we need to talk about the stock market and what's goosed the stock market so much. And part of it is reminding you about this inflation element. There's no inflation. Remember, inflation is any sign that in certain areas that shows proliferation of money or loss of confidence in money. And those areas have been the US stock market. Of course, there's inflation. So even if you took the government statistics at face value and thought that at the retail level on your price of bread that you aren't facing so much inflation, which is wrong, refer shadow stats, but park that for now. The hugest inflation is in the stock market. Why is that happening? Because the people who are being given the money, not you, the free, cheap borrowing, are mega corporations and high net worth individuals. And what have they done? They don't need to buy stuff because they have the stuff already. They buy back their own stock, and if they're high net worth individuals, they chase the stock market up on the dips because they've got all this free money with very little cost to beat. So they do the thing is, all I need is the stock market to do slightly more than that, and I'm getting free money. I'm being lent free money to buy an ETF or 5 stocks, the big fangs, throw Tesla into boot, and all I do is get free returns. So this is where the money is going. Now, recently, with the furloughing and the payments, etc., what has started to happen is that a little bit of money, and now some is getting direct to the man in the street. And when that happens, those people are not investors. They're not buying. And by the way, on that inflation, there's no inflation. We also have to ask the question about why has silver and gold done what they've done over the last year and a half. This is loss of confidence in money due to excessive creation of money. In fact, the central banks themselves have started loading up on silver and gold, and you have to ask, why is that happening? Why do they feel the need when for decades they never felt the need? Who gave them what script that they now buying silver and gold? And in the case of the Swiss National Bank, Apple stock and all the fangs. So now the central banks know the game and are chasing the only trade. So it's like the insiders. Remember I told you about the Zero Hedge article? I almost feel like I'm saying it every video. Tipping all of Israel off to buy Apple stock 4 or 5 years ago. The insiders are all on the same trade. They're going to create a melt up in the stock market that you've probably never seen the likes of. And how is this possible? Well, I want to deal with a few new concepts that I haven't touched in this video. And this brings Lynn and the interview we'll be doing with her. And if you've got any pertinent questions you'd like me to put, you're welcome to leave them in the comments as well. She's a smart lady and going to be an interesting chat. So what else has driven the stock market up apart from the proliferation of money, the American stock market, particularly the NASDAQ, the FANGs, but generally the S&P and the others, so much more than, say, the UK. I've mocked the UK. When I went into the UK in 1999, they were just sub 7,000, 6,990, can't remember. And Blair was bragging about we've never had it so good. That UK index is still well below that 6,900 mark, and I've long since gone, and that was the better part of 22 years ago. 22 years ago, a FTSE tracker, hear me now, 22 years ago, a FTSE tracker would still be between 15% and 20% down over 22 years. In that same period, the S&P and the NASDAQ are literally flying multiple times. What's the secret? Okay, some of you will say, well, it's tech and it's all of that, but it's not all tech. Look at the ratings of, as I've just given an example of Coca-Cola that Simon Black highlighted, but there are many others that are not high-tech companies that are absolutely significantly higher. So where does this all come from? And this is quite an interesting concept. So let's deal with what's actually going on in America in terms of taxation. What's actually happened in America is that corporate taxation, effective corporate tax, so you have your headline rates in America. Don't forget, people can do a lot of deductions, a lot of various things, claim certain subsidies if they're employing certain people, but the effective corporate rate of tax in America over the last two, even going on for not quite 3 decades, but as a cycle, has been heading down, 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 and down. In other words, companies at the top line on profitability are being taxed less. Profits. So company taxes on profits is heading way, way down. And in fact, the payroll taxes are the ones that are heading up. Basically, the oligarchy has teamed up with government against you, the employee. So you are being payroll taxed to the moon. And there's going to be a separate segment that I have to cover that in America also covers the health taxes that have come in, that are separate payroll taxes that are coming in. Now, some of you might be saying that American, but the corporations pay part of your medical taxes. You pay half and they pay half, so it's also a tax. So healthcare specifically has become a hyperinflationary industry that has gone absolutely mental in terms of costs, and it's unique to America. The big pharma, the big game, and this ties into Reset Sniper and COVID, how the control structure has pivoted from the oil industry into the health and pharma industry, and how this is their big extraction. So biotech and healthcare companies are the new weapon of choice of bringing control on you and also extracting. So pharma companies have incredibly high ratings in the States, charge incredibly high amounts. Don't forget, this was the company where someone who came in, who literally levered up and bought the rights to unique patented drugs, put up the cost 10,000%, and basically started bankrupting individuals who couldn't buy their diabetic, their various drugs, and just built a portfolio without even owning any labs, built a portfolio where their sole raison d'etre was to put up the cost of the drug 10 times, get leverage from banks, buy them, corner the market, put up the price 10 times. And the notion was, well, your insurance must pay. It's not a direct tax on you, which of course the insurers respond with ever higher premiums. And you have further flagrant runaway healthcare inflation. So on the payroll taxes, the medical is now a massive part of that. Now, the key thing that's happened with the corporates is that the corporates understand that American-based employees push their taxes up because they have to part carry. You get at payroll deduction level, you pay your tax, you pay PAYE equivalent. I don't know what they call it in America, your income tax taken at source if you're an employee. And then you pay your medical contribution and your company pays the other. So what's actually happening is you're getting far more outsourcing, the curse of the globalization, to employees offshore in America, where this particular cost no longer is a feature. Other countries, other nations don't have it, neither do they offer the same degree of benefits or for private healthcare that Americans are required to purchase. So what you have is corporates have much lower corporation tax, payroll taxes, most of which that fall on the employee, but some of which, particularly in the medical area, fall on the corporation, are now not hiring Americans. So you hire a dev team for your tech company out of India, you get a couple of American executives to move out to Bombay that manage the team, you jump on your Zoom GoToMeeting, whatever the case may be, and you run this outsourced team over there. It kills jobs in America. And we'll talk more about this when we get to Triffin dilemma. So I'm tying a lot of different dots together. How the pharma industry is, and for those of you that don't know this, go and Google, in fact, don't Google, BitChute, James Corbett, the Rockefeller, Carnegie, cornering of the health industry. So you need to understand how they listed everything else as quackery unless it was a chemical pill to make you feel better, which of course has umpteen side effects, immune destroying, etc., aspects. So go and watch that. But this is the manifestation of that new access. And this is why we walked from oil and we were prepared and ready to give you the short to single digits on oil because they're not invested in oil anymore on any great degree. The Rockefeller family are actually suing Xenon and trying to wrap themselves in a green blanket after for the better part of centuries pumping and burning oil and providing all the oil that was pumped and burned out of the American axis of oil provision. So you really need to understand that. But anyway, back to the combination of what we'll get to, Triffin dilemma and the taxation. So I'm looking at a chart over here that you can't see, that I'm keeping on the laptop, which is giving me this funky lighting over here. And I can tell you that exercise tax is way down. Other taxes, way down. But the social insurance payroll taxes are extremely high, and that's for American employees. And part of it is carried by the American employee himself, and part of it by the corporations. So the corporations, the megacorps offshore their employee structure, keep low levels of US employment. They offshore the American, a large part of anything that can be offshore that doesn't involve, and so many things can be run off-site, call centers, tech devs, everything can be run globally now with communication as we do on Zoom and Loom and all of these things. So a huge drop of employing Americans. And as I say, this will touch with the Triffin dilemma, where you actually have to create a deficit, because I'm going to come and tie all these things together, but give me time. So what you've actually got is corporation taxes for America are going down, down, down. So the point of profit is no longer the key point of tax. Actually, the key point of tax for a corporation is at the employee level. So what do? They employ less people. In fact, many of you will have noticed that corporate shares go up when they announce layoffs. Now, sometimes that'll be for companies that are having trouble, and sometimes that'll be for tech companies that are offshoring. So what's actually happening here is people are applauding them, recognizing the model of get rid of Americans, pay less tax. Have just what you need for your head office, HQ, a post box, a CEO to show up, etc., and offshore as a megacorp as much as possible. That reduces your employee tax in America. Your employee costs in other countries significantly less, because America has the unique hyperinflationary healthcare system for which part of the cost is covered by the individual American at payroll level and the corporation. So get rid of that. Simple as. So what you've actually seen is a clear trend of megacorps actually getting very efficient at the profit level by not employing Americans and offshoring skill sets that they need. This has been the gift for globalization. This is why, as a participation rate in the participant rate stats, actually rather low. The non-farm you get is anybody who's not been working in 6 months is eliminated and is deemed no longer actively looking for a job, just bone idle, even if they're running 3 crap gig economy type jobs to replace one proper job before, delivering pizzas, serving drinks off shift, and a 0-hour contract somewhere to try earn the same money that they used to earn when they had benefits, healthcare, and an employment job with a big corporation. So with that understood, you can also understand that during this entire period, American corporations are the most profitable because they get lower costs from outsourced labor. They're also getting all the lending to buy their own stock back, because the banks have to find and do some lending. They don't want to lend to you and me, Joe Schmo. They don't want to lend to SMEs. SMEs are devoid of affordable capital. Look, if you're prepared to sign a contract, you're going to give collateral of your personal home and everything you own, you will get a pretty shitty contract with a high interest rate out of a bank, I've no doubt. Megacorps, they don't need to provide much in collateral at all, and they get very cheap lending. And that way the bank gets billions out so that they don't get punished by the Reserve Bank, in this case the Fed, for having too much collateral on their books that they have to park at the Fed. So there's been that sort of, you've got to get money out, that kind of push. Well, if the only exit is there and you keep creating pressure, that's where the water runs, and that's what's happening. So you get that effect adding to the stock market. So that's a very important concept that people aren't understanding. And the healthcare costs in the States have looking at another chart right now, such a divergence from the consumer price index. Remember, that's their crappy consumer price index. And this will be their crappy, bad stats, health consumer price index. But I can tell you from 1950, they claim the CPI is at from around about low-level numbers. And let's go from, when did it first cross 100? In 1980, they were both around 100 at the benchmark. Today, they claim your average CPI is 250. I put the lie to that. BLS stats are not to be trusted, but that's the claim. At the same time, healthcare costs are well over 500. So that's more than 2x. And I say both these are from the government statistics, are both incorrect and understated. And in fact, your healthcare would have gone up a lot more if you are Americans. So what you have is you get share price appreciation and labor offshoring, which means awesome stock market, shit job market. Simple as that. Why? Because the incentives are designed to do exactly that. Don't hire Americans, and we won't tax you at point of profit. Okay, so let's talk about the Triffin dilemma. So these things all overlap. So pharmaceutical, why we're facing COVID right now, how the control is coming through the healthcare organization, not the legacy Rockefeller tax, as I refer to it, of the oil industry, which used to create skim profits in high liquidity areas with high oil prices, and then be a thermostat that could be dropped real low when we have major deflationary periods. Now the axis of the vector of attack is through pharma and health. So Triffin dilemma, named after Robert Triffin. Okay, so he was someone who said, hang on, there's a dilemma that happens when you give the global reserve currency to one country. They have to supply sufficient currency to the rest of it, for the rest of the world to use as the global reserve currency, because that currency is required outside of their own borders as well. So what typically happens is, this is a big country. Only certain people, Switzerland, quality that it may be, can't be a global currency provider. Too small, not enough Swiss francs. The amount of Swiss francs they would have to create would have to be, 1,000x to what they have inside their small population country. So this privilege that America has, called the exorbitant privilege, in fact, this privilege that America has by being the global currency, and that's what many people will look in the World Health Organization, the EMF, and all of these pan-national to take away from America. And it was very devastating to Britain when that happened, when your currency lost its exorbitant privilege, and it went right the way through. Britain had horrible 70s. They were paying back the Marshall Plans very strongly. Of course, that got deflated away and was finished by 2000, the cost of World War II. But there was the whole sick man of Europe in Britain during the 70s until Thatcher came in, 60s, 70s. You're talking about from after the war, 50s, 60s, just hardship. So be careful, Americans. There's, it's a double-edged sword. But anyway, so what actually is required when you have the Triffin dilemma, and he was around in the 60s and he warned of this, is a country with a dominant economic and geopolitical power. And that's the military-industrial complex playing a role in this as well, which is also a part of the lizard that is the control structure. Can be set up a global reserve currency by design, but it becomes partially self-perpetuating. For the currency to be widely used, they have to create an abundance of that currency outside of the home country. So what that actually means is you have to run trade deficits. Now, this is where some of you get a bit confused. Why? What is a trade deficit and what does it mean? So what that means is more other countries are selling things to you, than you're selling to them. Okay? So that means you are buying more of their stuff than they're buying of yours. That's how the dollar, the exports minus imports, the net transfer is dollars out, because you need offshore people to have dollars to pay their loans, for example, that their countries have in dollar-denominated debt as one reason. So they have to sell more of their goods to you. In other words, you have to import more of their stuff than they are taking of your export. That sees a steady flow of the currency offshore. That means the major currency, the one that is providing the global reserve currency, has to be at run trade deficits. In other words, they have to be a net buyer of most people's other stuff. So what that does is it artificially inflates the strength of that currency. It gives a privilege and it gives it artificial, because there's this net demand that's not just driven from your local population, but there's a net demand outside. That sees more people wanting dollars, that sees the dollar trade higher. Now, when the dollar artificially trades higher than it should, two things happen. Your home local base in America is non-competitive. The dollar's too high. You can't make things cheaply enough. You can buy them from China to a similar quality for a whole bunch cheaper. You can buy them from Japan in yen a whole bunch cheaper. You can buy, etc., etc., etc. And actually, you can talk about Ford. Ford apparently had about a $3,000 cost per car just on healthcare and pensions. The GM, was it GM? I think it's probably pretty uniform across all the US car makers. Just for the unionized workers of yesterday, they start with a $3,000 cost per car. If you work out how many cars they're selling, it would only go up if they sold less, because there's a certain fixed amount for ex-employees that are all pensioners to keep funding their pension. Now, the other countries don't have such a bad system. They don't have those high costs. So being competitive, and that's another example of American worker causing a problem to corporations that's no longer done. You can't change it for those that have already worked 40 years and retired, and you have a social contract with. So that's kind of a problem. But anyway, let's not diverse too much. So going back to the Triffin, there's an inherent currency overvaluation. So what that does is it has a problem. You have this extra military dominance. You have this relatively unique ability to print world currency in its own right. And you can buy all the commodities are priced in your currency. So everybody has to buy dollars to actually get oil, for example, and various other goods. And for decades, it creates, hence it's known as the exorbitant privilege. Now, this works well for decades as the benefits typically outweigh the burdens, but eventually it leads to a polarized society and a deeply negative net international investment position, because you're buying their stuff and you're buying more of their stuff and they're not buying enough of yours. And things start to threaten the country's stability. And to maintain this global reserve currency status is a problem. And the burdens for having that status start to outweigh the benefits later. So if you were to design a tax and healthcare policy which specifically helps with the goal of offshoring labor, doubling down on incentivizing businesses with low headcounts. So you want to have megacorps with few headcount in the US, lots of offshoring outside of the world, and maintaining a structural trade deficit. This is the absolute best way to do it. So all the Triffin dilemma and the taxation policy, which hyper awards and is very low at the profit point, but very high at the employee point, absolutely is designed to create deficits, because now you're funding employees offshore. You're spending dollars to pay salaries in India for a development team. You're spending dollars to pay construction in China to a construction and a factory team. And what you end up having is exactly this super stock market bull market, where the mega corporations only do exactly what they incentivize to do, and you get the benefit of you get to play the Triffin's dilemma of sending dollars offshore and proliferating it at an ever higher level, and at the same time getting this melt up in your essential stock market, because your companies are effectively more profitable. You're offshoring, so you're getting lower labor cost. You're not having to pay healthcare. You're making higher profits. And those people that actually want to bring their dollars that they've earned offshore can also be buyers of your stock with the dollars that they have. So the net investment position of a country measures how much foreign assets they own minus how many assets foreigners own. So if you have a net investment position, this is how much does the rest of the world own of your stuff, and how much do you actually own in their countries. So for example, if America was buying up the Indian stock market, which it wouldn't be doing, what percentage of those shares is held by Americans versus the other way around. It's not only stocks, it's any assets. But a negative figure, of course, means that foreigners own more of their assets than you own of their assets. And America is in exactly that position. Foreigners are starting to become greater net investors in America than America is investors in them. And that's part of this exorbitant privilege of ever having to create deficits, being a bigger buyer, so they can just buy with super powerful currency that is overvalued because of the exorbitant privilege, and because people want that currency because it's so universally accepted. So they're paying a premium to get dollars, and you're getting cheap goods. But at the end of the day, as it gets later into the cycle, you start to have exactly this problem. So the Triffin dilemma, which plays out, which was clearly well known and well understood, is absolutely designed for this end of cycle phase, and the stock market pump is exactly what you should be expecting from foreign dollars coming into the country, local megacorps getting access to cheap credit to buy their own stock, and this has led to you actually having owning less assets offshore than offshore people own of yours. And that's a bit of a problem. I'm looking at the charts here as well. So here's why you are getting a stock hyperinflation. I'm sorry, if you go up 10x and you Tesla and you run a battery car, don't try to sell me it's too much of a tech thing. So there's a couple of algos that measure the four corners and try to drive it automatically for me. Trust me, VW's on that too, the Volkswagen group, so will the Mercedes-Benz group, so will all of them be. They won't be that far behind. It's not a tech company. It's a battery car company. Now they'll try to say, well, we've developed all these amazing algorithms, all of that. They're a control structured company, and that's why I've said Stanley Druckenmiller will have got his backside handed to him, not because he was wrong about the balance sheet and the income statements and the growth and likelihoods of all of these things, just because this is a control structure company that is essentially tracking you, that could essentially, as I say, take you to the police station when you're asked to go to the grocery store because they've decided you've in 10 years' time, I'm not saying tomorrow, that you've actually done an infringement and it's your third infringement this week and you need to be detained for a day or two, or cuffed, or have your tag, your chip checked because the signal on your hand isn't coming out so good. It's part of the arm of the great octopus, unfortunately. Anyway, we won't go too far down there. This is Markets Hyper channel. But that is why we are having inflation in the stock market. That's where the inflation is. The inflation's in the stock market. But it is also in the everyday basket of goods. You're just not getting the true numbers, which is the BLS numbers. And that is why the participation rate in the economy is so low for people that actually are of working age in America, because it's not in the interests of American companies to hire Americans at all, because the cost of the healthcare, and you can thank Obamacare for that, by the way, and many of the others, and the Medicaid, and they're all bust, which is also why the payroll taxes are so high and on an escalating high. And they're saying, well, it's because farmers gone up. That's the new axis of control, which is coming through the COVID-19. So you're actually getting, through joining a couple of dots up, you're getting the concept of the exorbitant privilege and Triffin's dilemma, how it works, how it's a requirement to provide dollars to offshore people, where it then eventually leads to offshore people having disproportionate ownership of America, how the corporations behave, how they've been getting scot-free, very light corporate tax at the profit point, and how they're continuing to grow profitability by reducing headcount, and how that sees their stocks go up when they make announcements of that nature in terms of profitability, because it is directly feeding a profit loop. And any skills they need, they will then employ offshore. So it's actually anti-American for Americans that seek jobs. If you run an SME or a medium-sized business, you should exploit it as well, because that's what everybody else is doing. Do not have big, expensive American employees where you can have very hard-working offshore people, but you might need to be of scale to actually manage that. You might need a manager on site offshore in Bombay, you might need a local guy, you might need to do stuff, but it definitely makes sense. And that's been part of the globalization of labor trends that has come. That has also seen the likes of Zoom fly. Many will say, oh, well, COVID pushed Zoom. Yes, but these companies prior to Zoom and before were all doing pretty well anyway, because offshoring was becoming the new. It's not the first, COVID wasn't the first thing that brought in online meetings. That had already begun with globalization. It just helped accelerate it and spike it further and create this virtual office all over the world. Okay, so a couple of short, not so short actually, comments on Triffin dilemma, how it works, what the requirement is, and how it dovetails in with the valuations in the US stock market, how those valuations don't apply in many other stock markets at all. And you need to understand the Triffin dilemma to see that actually you end up with foreigners having a very, very high net ownership position as well, because it seems like the only game in town, and that leads a momentum push where you'll get all the Robinhood traders locally in America, but you'll get all investors from around the globe wanting American exposure until the end of time and the end of that privilege. And then it's a long way down. Okay, guys, I'm going to cut it right there. Let me know if there's any questions you'd really like me to cover with Lynn. It's getting a bit dark here. The modzies are going to start circling and carrying me around and drop me in the pool here. But good to have a check-in with you. Grab the links below. If you want to book in and have a chat, do that. Grab the mini-series if you just want to find out more about us. Thanks for watching. Like and shares are greatly appreciated. And we'll come back to you with a reset clip on how it's about control. It's not about the disease. It's all about control with personal experience from me. Okay, bye for now.